Hello everyone, welcome back to another FinMeUp Weekly Stockwatch.
Hi and welcome to the latest episode of Stockwatch. Let's try that again. Hi and welcome to the latest episode of Stock Spotlight, your weekly stock recap with FinMeUp. You thought we were taking a break? Not at all. As we paused our weekly reportings, we started to brainstorm and as a team decided to offer you a refreshed weekly YouTube video. Stock Spotlight, keeping you updated and in the know of all things stock market related. I am Ingrid Kluko, the latest addition to the FinMeUp team, and as your community manager, I invite you to connect with me regarding questions, concerns, or even innovative ideas. Seasons come and go, and we at FinMeUp realize the value in refreshing our mindsets, vision, and vibe. Please keep your eye on us as we gradually roll out refreshed, relatable, and raving content as part of FinMeUp's mission to becoming SA's personal finance companion. No matter where you are on your finance journey, we are part of your crew. Enough about FinMeUp's new chapter. Let me hand over to the experts to talk about the important stuff. Stocks.
Great stuff, thank you so much Ingrid. Today we'll be looking at transaction capital, Caxton, Sanlam and momentum. Transaction capital, it's obviously been on everybody's lips the past 6 months, lots of things happening and obviously the share price has been taking massive hits. So their existing CEO will now step down as CEO. So we'll get a new CEO. The restructuring of the SA Taxi to right-size the business is impacting their core earnings per share, headline earnings per share, and basic earnings per share. So basically, SA Taxi is still very much struggling. The SA Taxi operations and balance sheet restructuring have made progress, but obviously there's still issues. WeBuyCars, which was the darling of their business, are expected to be approximately 20% lower, the earnings, than last year. Gomo is expected to scale substantially following an agreement with Standard Bank, and Newton's financial year 2023 earnings are expected to grow, but also at a slower rate than previously communicated. So overall, in those announcements and results, I'm not really seeing any light shine through, but obviously, you know, the founders team are still very much involved and they really know about business. So the big question is, will they be able to turn around SA Taxi? We haven't seen that happening so far. WeBuyCars, which was the darling, is also now showing lower earnings. Gomo and Newton is almost two different businesses. But yeah, Paul, what do you think? What's going on?
Yo, Higgo, this week my Twitter has gone absolutely ballistic on this company. It's a disaster, like they say. But let's take a step back. So for me, in order to consider this as an investment opportunity, I have to ask myself, the decision tree is, what are the chances they are going to make it? So are they going to make it or are they not going to make it? So if they're not going to make it, it's a no-go. We're not going to invest. And if you think that they will make it, at what price doesn't that then make sense to actually invest in the stock? Is it 6 Rand? Is it 4 Rand? 2 Rand? Because if you believe that they will make it, at some stage it will make sense, right? So there's a few things to consider here. Firstly, SA Taxi. SA Taxi has had a very bumpy ride, and of course the recession hasn't helped anyone. The strikes and the excessive debt that the company has gone on, so that really sucks for them. The question for me is, will SA Taxi make it, and will they be able to ring fence the debt within SA Taxi, or will it kind of spill over to the other businesses like WeBuyCars in this umbrella that is transaction capital? If they can keep it to SA Taxi, then I would say that's a soft win for the boys. If it's not, then we have some problems. And then so that's a big question for me. And then WeBuyCars, what's happening with WeBuyCars? Because they had this amazing last few years, and now we see it's 20% lower earnings per share. So before this news hit the market, I actually did a quick discounted cash flow, and I came to 12 Rand a share. Currently, it's a lot lower than that, about half of it. But unfortunately, in the DCF model and any economic model, you can't include millions of different variables and scenarios in your model. You have to keep it quite simple. And the assumptions that I went by is, one, SA Taxi does not exist. So we kind of exclude SA Taxi totally from the valuation. And two, WeBuyCars remains at a flat growth rate, like 0% growth for the next 5 years. And with that, we got to about 12 Rand a share. But unfortunately, the model does not include excessive debt from SA Taxi spilling over to the other businesses. WeBuyCars actually now making 20% less. So trading flat would have been an achievement, because remember, they had a brilliant few years. So now it's actually lower. And also, of course, the market having, basically throwing hate towards this company. The CEO and insiders are aggressively selling shares. The CEO is stepping down. You can't include that in your model. So at the moment, it's a little bit of a falling knife for me. I won't invest in this company. It's just too risky. If you really want to punt or take a gamble, you can go to the casino and put everything on red. Or maybe there's better opportunities for high risk assets like small caps on the JSE, or even something like cryptocurrency. This company now is at a stage where it's a coin flip.
Yeah, it's definitely a punt at this moment, because if you invest in the company now, it is a belief in a recovery story, and that the management will bring all these different parts together and make it work once again. So for me, also just staying on the sidelines, it's an interesting story to watch. Next, a company that you, Paul, I know you love this company. Many of my friends love this company. I know Charles Buerta loves this company, and that is because there's not a lot of risk, and you're going to probably tell us why now. So their revenue, Caxton, their revenue grew 16.6%, profit for the year grew 38.3%, earnings per share grew 34.4%, and the net asset value per share grew 7.2%. Paul, this is your baby. Give us insights.
Yeah, no, Higgo, excellent. I'm super proud of these results, and Caxton being my main holding, of course, I was holding my breath, and yes, super happy camper. I think, for a company of this size, having this little risk in the company, there's no debt. In fact, I actually have a massive cash position. There's no risk, and in a struggling economy to deliver these type of results and pay me a super solid divvy, just on the side. I'm really, really happy. So just maybe a quick overview again for those who don't know. Caxton Printing and Publishing and Packaging. So the one side of the business is printing and publishing. They have over 100 local newspapers in South Africa. Before I invested in Caxton, I didn't actually know that we had like more than 15 newspapers in the country. But where we live, we have the Report and the Burger and this and this and this. But there are many rural little towns in South Africa that has their own local newspaper, and then a company like Caxton basically puts that together and also prints it, and it's free. And then there's companies like ShopRite that advertises in those newspapers. So over 100. This side of the business isn't actually going anywhere, because printing and publishing isn't an exciting thing. It's not really going anywhere, but it's maybe even slowly declining. But they have no debt in the business, and it's a cash cow. It's generating solid revenue for them. And then the other side of the business is this exciting little thing, which is the packaging part of the business. And packaging is one of the biggest industries in the world, actually. And there's this whole narrative now going from plastic to more sustainable, ESG, green type of packaging, like carton. And Caxton is a player in that game. So I'm excited I feel comfortable with the one side of the business just doing its thing, making me money, and the other side is this whole new venture that they're diving into. And they have a massive cash position, over, I think, almost 2 billion now, for a company with a market cap that's about double that. So they are actually benefiting from high interest rate. Yes, you can say that, yes, the company, where are they investing the money? Why is it such a huge cash position? But at the moment, that's not a worry for me, because we are almost 12% interest rates at the moment. So I'm happy, like they're just investing that money and I'm sitting back. So what would I like to see? I would like to see them continue to acquire small businesses, local newspapers, just grow the business. We know South Africa and the segment as a whole isn't really growing as we would like it to do. But if you keep increasing your chunk of the pie, that's a good thing. And then maybe 2 points of concerns that I will mention, and these are small concerns, but let me just put it out there. The one is the share in Impact. They have 34% share in Impact. And let's just say that the management teams of Impact and Caxton aren't going to exchange Christmas cards anytime soon. They're not going to go camping together. They don't like each other. And my fear is that it becomes a a bit of a pride thing where they acquire impact and then they pay too much for the company and just because they want to. That's going to hurt shareholders a little bit. In my opinion, they should just let the shares go or just keep it as is. And the second concern is, and this is just a small thing, the CEO, the original founder, is getting quite old. So whenever any insider passes or someone with a lot of shares, then that shares will hit the market, almost like an unbundling of some sorts. And that might drive the price down a little bit. But I mean, it's almost like your grandma of 65. She can live for another 30 years. So just a small concern. But overall, I'm keeping my shares, not increasing, but I'm keeping my position. I'm waiting for my divvy. Gonna buy some Christmas presents for my friends and family with a divvy. So yeah, happy camper.
Paul, hopefully you buy me something for Christmas with your divvies.
Yes.
The next company, Sanlam, net results. So just an interesting fact for those who did not know, obviously EasyEquities is the favorite retail trading platform or investing platform rather. Sanlam actually owns 30% of EasyEquities. So just a fun fact. Moving on to the next few companies who are all in the financial services space, mostly insurance. So I'm going to read all of these results and then just bring it together. So Discovery trading statement, the earnings per share is expected to decline between 3 and 8%. Sanlam, their earnings per share is expected to increase by 26%. Headline earnings per share expected to be increased by 118%. But the total net client cash flows actually represented a significant decrease of 68%. And then Momentum, the earnings per share grew by 20%. Headline earnings per share grew by 5%. Operational profit grew by 31%, investment return fell by 35%, and dividends per share grew by 20%. So, bit of a mixed results bag, but Paul, maybe you can just comment on the overall Discovery, Sanlam, Momentum, sort of in the same space. Give us some insights on maybe the industry and how it's operating in South Africa at the moment.
Very good question. Thank you, Higgo. Yeah, insurance is always interesting baby for me. So we've mentioned this before, but insurance is always that trade-off. Remember, if you are the insurer, you are betting that hopefully this guy lives, for instance, longer than that he lives long, and for the client, in a weird way, he hopes that he dies sooner because then he paid less and gets all the life insurance quicker. So it's this weird thing. But as an insurer, you want to you're pricing your product in premiums, so the monthly installments, and of course you have to stay competitive. So you can't just price it as you want to, because then they will just go to the competitor, which is in this case, so if not happy at Discovery, they'll go to Sanlam or Momentum or vice versa. So you have to keep the premiums competitive, and then eventually you're going to have to pay out for car insurance or life insurance or income protector. So that's in your expenses. And the difference between all the premiums that you get in every month from everyone paying for the cover and the actual payout is called the underwriting margin. So you want a high as possible underwriting margin while still staying competitive. Now, in the insurance industry, I'm not a big fan. The reason why it's so volatile, it's literally in a business of it's a playing game. So the actuaries are sitting there in their offices and they're making the calculations, and it's like it's a game of chicken. Like, what's going to happen first? And the last few years, like literally in this winter, we've seen massive floods, for example, in KZN. That really hurt a company like Sanlam. Really hurt them. This winter, we had a super wet winter in the whole of South Africa. It's raining everywhere. So you can imagine the amount of claims for houses, cars. And then you have weird black swan events like a COVID. All of a sudden, everyone is, people are dying and stuff like this. And the insurance companies are the ones that's going to have to cover those liabilities and those events. So not a big fan of that unless it really makes sense for me. The other thing is that Africa's insurance market is quite saturated. So, and maybe one more thing, the accounting is always difficult to understand. The infamous Discovery financial statements. Yes, Discovery is a great company. I myself am a client, but to understand where they get all those figures in the statements, it's I don't think Warren Buffett himself, he will also have a head scratcher there. So I think the companies that we have to look out for from an investment point of view are the companies that has expansion potential. And the two that really comes to mind for me, one is Discovery and the other one is Sanlam. Because these guys have a global footprint already, expanding into Africa, Europe, even Asia. So there's really potential. So you can increase if you can increase your market by 2 or 3-fold, then you're really going to make some money. But given South Africa's state, like business in South Africa, it doesn't really excite me. I think that there are probably better opportunities out there.
Thanks for that, Paul. And on behalf of all, especially people living in the Western Cape, I can truly say that, yes, it is a wet and very long winter. Looking forward to the summer. Thanks for watching Stock Spotlight, your weekly stock recap with FinMeUp. We'll be back next week. Remember to check the links in the description and join the community. Go get a pet insurance quote. Just go see what we have for you. We want to be your personal finance companion. Cheers.